Good morning, friends. This is the update for 3rd of March 2020. Now, last night, the US had a big rally of about 1200, points on the Dow. Again, this morning, there hasn't been great follow through on in Asia. SGX is about 45, 47 points. So it does not look like there is great amount of follow through. Why did the US markets rally? Apparently, because there is some talk of coordinated central bank action. Now, often, these sort of news flows where central banks they inject liquidity. These kind of news flows are temporary because the markets realize that they cannot boost the markets for a long period of time, and there is underlying weakness which these bankers are trying to hide uh, by uh, these fake sort of rallies. So as I said yesterday that we are carrying our puts, and once this sort of rally is over, it could be today, could be tomorrow. We have seen how the market falls. So, for the moment, we continue with our bearish view. My stop is probably closer to, um, I would think, 11 300 thereabouts. But once you are carrying positions overnight, then you need to give them some room to act. My sense is that the market remains weak, and we will finally break 11,000 in a very decisive sort of manner. On the bank nifty as well, you could have that 100 point style rally, but again the rallies will be so small that they would not be able to hold with any sort of momentum or strength. And again, even the bank nifty should collapse towards, uh, you know, possibly 27,000 at the lower end. So, again, on the bank nifty, from yesterday's close, you could say 3 to 400 point type of stop should suffice. Coronavirus is still there. Now there are varying reports that China, the new cases are reducing, but rest of the world they are increasing. Basically, nothing really has changed from yesterday. So the idea is that at some point the downside is likely to continue. Again, on individual stocks, I think the way financials have fallen yesterday, metals have fallen, particularly the PSU banks, which were kind of holding up because of the SBI cards issue. They are looking like they are facing pressure on the downside. But overall, there is great amounts of FII selling. Even yesterday, they have sold. Um, Although they didn't sell a lot, but the sense I am getting is that the buyers have moved to the sidelines. So, whenever a bit of selling happens, the impact cost and the momentum picks up on the downside, and that is why whatever small rallies you get finally lose momentum and start to collapse on the downside. So even if you do get this 38 point gap up, do not participate on the upside, because chances are that again long positions may just get trapped and the market comes hurtling down by afternoon. So that seems to be the bigger possibility. Asia opened up quite a bit, like Nikkei was up 200 points at some point, and now it went into the red. So Asia is not really impressed with the US rally, and possibly a lot of the US rally was short covering. So chances are that the global, downtrend stroke bear market continues, and you will start to see big falls happen again on a day like today. On rallies, yesterday something like Jubilant also fell 4.5-5%, and Muthoot Finance came off. So, now the issue is that even the stronger stocks are coming down. So, nothing is now so strong that it will go up against the market. So, that you have to be very, very careful of, that now things which haven't fallen are likely to come off and show declines. That should be it for the moment. Uh, Take care, trade well, and please consult your financial advisor.